Contentious elections around the globe, ongoing deadly wars in Europe and the Middle East, and global economies at a crossroads after the most aggressive pace of central bank tightening in a generation. These are just some of the risks on the minds of the world's biggest investors. But what are the risks that many investors are ignoring? I spoke with three titans of Wall Street: Oaktree co-CEO Armen Panossian, Angel Ubide, who leads global fixed income and macro research at hedge fund giant Citadel, and Ann Walsh, CIO at Guggenheim, to find out what they think are the next big risks. Armen Panossian, co-CEO at asset management giant Oaktree, says investors are enamored with artificial intelligence, but may be ignoring the technology's potential to destabilize job markets. What is the next big risk in your eyes over the next 5 to 10 years?
The biggest risk that I see with respect to the markets and to society in particular is artificial intelligence. Artificial intelligence clearly has the potential for very large economic gains, revenue increases, cost efficiencies, and that investment opportunity is really exciting. It's easy to disregard the societal impacts of those same efficiency gains. What happens to normal jobs that are become obsolete because of artificial intelligence? Think of cashiers or drivers. As artificial intelligence becomes a real alternative to physical labor in some of those areas, millions of people could be out of jobs. So who's going to retrain those people? Because if we don't figure that out, that there will be social unrest, or there could be social unrest because of joblessness. In terms of the markets, artificial intelligence clearly is getting a lot of support from the markets. But just like the internet in the late 90s, there was this promise of revenues growing rapidly. While the gains are clear to see in terms of their potential, the timing of them is impossible enough. And if that timing takes a lot longer than investors expect, I would expect to see pretty violent resetting of valuations and potentially some losses for investors along the way.
What does this look like for an investor who's keeping a close eye on the economy, the job market, let alone investing in AI itself? It seems like the risk you're outlining here could impact many markets.
The attractive part of it and the scary part of it is that there isn't a monopoly on intellect that could be used to develop artificial intelligence technologies. There is a shortage of semiconductors and chips, but artificial intelligence allows economies and countries, and potentially those adverse to the US, to develop certain technologies and skills through artificial intelligence that could be problematic from a geopolitical standpoint. In terms of what investors should be looking at from the economy, I think it really has to do with the number of people entering colleges that are focused on technology degrees versus those that are not. For example, those people entering colleges that are focused on majors that involve moving words on a page, they could potentially be at risk of being out of jobs down the line if artificial intelligence continues to improve in its ability to reference old documents to help support the creation of new ones. It's hard to really have a leading indicator. I think, unfortunately, from the job market perspective, we're going to be looking in the rearview mirror probably after it's too late. So it's really hard to kind of pinpoint what economic indicators we should be looking for.
How do you think about this in terms of how people are behaving right now? Do you think most investors out there are ignoring these risks?
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. I think investors on the private side are spending a lot of time and money helping hyperscalers get up and running, and that involves buying chips, setting up data centers, getting the right power that is needed to run those data centers, getting the right water to cool those data centers. There's a tremendous amount of infrastructure spending happening right now in digital infrastructure investing. And if you're in that groove and you see that there's a tremendous but unknowable in terms of size market opportunity, you're going to just focus on getting capital out the door because it seems insatiable right now in terms of the demand for constructing these types of data centers and other infrastructure. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
What does this mean for you as an investor and how you approach the AI story?
We're careful about who and where we lend into or invest into. We're not, sprinkling capital across all players, but we are very selective and we are participating in the growth opportunity offered by AI. With that said, we are careful not to get over our skis and not to get too overexposed or too concentrated into AI, because we do remember what it was like when the fiber optic boom was happening. Now, if there is a dislocation and we do see a re-rating in terms of valuation of assets, we do think that there will be a lot of opportunities to invest in a more distressed or opportunistic way. Oaktree has a very strong business in distressed or opportunistic investing.
What happens in the next 5 to 10 years, or even sooner, if investors keep on ignoring the risks, as you've mentioned?
We will not recognize that there is a bill to pay with respect to employment and with respect to people who rely on paycheck to paycheck jobs, in jobs such as being a cashier, as I mentioned, who will then find themselves untrained and not ready for the new economy. And we will be forced as a society to either have or suffer social unrest or to have a welfare state. The risk is if we don't do anything about it now to retrain some of these people or to prepare for a post-AI employment landscape, we will have issues with a deepening divide between the haves and have-nots, the wealthy and the paycheck-to-paycheck people, and that will mean a considerable amount of harm to a lot of people who don't expect it to be coming their way right now.